Welcome to the stock analysis update for Natwest Group. Please remember this is for entertainment purposes only. Natwest Group are actually the only equity I have left in my portfolio of a significant size. I have it at about 4% of my total portfolio. That's after I sold half on Friday, partly obviously because of all what was going on, but also because the price had dropped below this channel that I had it in, a channel that went all the way back to the beginning of 2024. At the end of last year, I did a 47-minute video on Natwest Group, so make sure you've seen that if you haven't already. But it was apparent there that most of Natwest's revenues come from within the UK, so it shouldn't necessarily be affected by the Trump tariffs, unlike so much, say, the likes of Barclays, who have lots of US revenues. But obviously, NatWest and pretty much all stocks are being badly affected by what's going on with the US stock market, which is obviously also affecting the FTSE 100 quite badly, which is down over 12%. In my video, I actually put together a few key KPI that I was looking at, which are things important to profitability of the UK banks. One was that I wanted to see the yield curve normalizing, and actually this is kind of happening. Although at the long end it's staying up there, at the short end we've actually seen yields drop sharply the last few days. And the point that's most important for banks is actually around the 5-year maturity, where we've seen a significant drop in yield. So actually this part of the equation is kind of looking good for banks. And for more detail on why all that is, take a look at that video I've already done. But on this parameter, it's actually looking kind of good. However, then there's house prices. If there's a house price crash, and also if the UK economy starts to go into proper stagnation, this will be bad for banks because it means they'll have less people. They'll be able to lend less money to people, and the most key important factors are the net interest margins in the loan book. So although we actually perhaps see the net interest margins maybe rise a bit, we really have got to be worried about the loan book. For me, the strategy for NatWest now is we've got this moving average here, which is the 200-day moving average, but which I've kind of transposed onto the weekly chart, 29-week moving average. Price has actually stayed above that. It crashed below it during the weekend while the market was closed, but then it has jumped up sharply today. So we are actually above that moving average. So for me, that's like a key thing. And if we do drop below that, I'll be very likely to sell. But in conjunction with looking at the markets as well, the S&P 500, the market's actually not going to open until about 60 minutes time as I'm doing this now, but it has actually bounced. The S&P 500 has actually bounced from the bottom of the channel I've drawn, and the point at which the S&P 500 has bounced is actually at the top of the FANG bubble. So this is obviously a very obvious place for it to bounce. You know, we could see a bit of a recovery for NatWest Group, but then the question is, does this sort of thing happen, or do we then crash below that level in the coming weeks? And the kind of fallout from that, which would be affected, which would you'd think affect the UK, you know, as we broke below this moving average, I really can see myself selling, you know, because we still don't know if this is just like a 1 week crash or something that's going to go on for many weeks. And assuming that's what's going to happen, I still think that then at some point, as we enter kind of a new economic cycle, or once we work out what's going on, banks could have a good entry point. But I'd want to look at their quarterly updates to see what's going on with the lending book and lending book customer deposits and their cash flow, because I think it seems likely that, assuming I do get tripped out of this position, you'd see much lower prices first, and there's probably will be an opportunity where we can actually look at their quarterly updates and confirm that we're seeing a decent net interest margin and a decent trend to lending before going back in. So that covers my video for Natwest Group. I hope you found it useful, and see you at the next video. I do videos like this one just for fun as a hobby. It's for entertainment purposes only. Always consult a qualified financial advisor before making any investment decision.